So they are welcome back. This is the part 3 of this topic, trading section and its implication. There are 3 major financial centers that influence cryptocurrency, namely American market, Asian market, and European market. All these markets intersect, right? You'll find out that after American market, they dump on the Chinese market. After the trading, the Chinese market dump on European. And European, after European trend, they dump on American. And the American, this is how the circle goes. And there is a complete 24 hours. When you look at that time frame, you find that there is a complete 24-hour time frame. So the trading, the financial world center makes a complete 24 hours time frame. So that's why if you want to be successful in trading, you will always do your chart study using high time frame. You might enter in using a 30 minutes time frame. Normally, what I do is that I will first look at to understand the trend, right? Because the 1 day or the 24-hour time frame give you a clear understanding of the market trend. And then I will look at the 4-hour time frame. Then after looking at the 4-hour time frame, then I will use 30 minutes time frame to set my trade, right? Because if I depend on 30 minutes time frame, there's possibility that the trend that I'm seeing on 30 minutes time frame might not be the true representation of the trend of the market. You will find out that on 30 minutes time frame that the market might appear to be on uptrend, but when you look at the 24-hour time frame, you will discover that the market is on the downtrend. That's why most people, when they wake up, most times they look at the market using 30 minutes time frame, and they see that the market is dipping, right? The market is dipping. The next time they find out that the market is pumping, right? Or sometimes when they look at the market, they find out the market is going uptrend, and they were like, oh, the market is going uptrend, it's a time to make money, especially for those who trade spot market. They will jump into the market and to come back again, and they find out that the market is dipping, because already on a 24 hours time frame, the market is on downtrend. It's just a little pullback that happened, and they see that pullback as a uptrend, right? So in doing your study, you first of all do your study using, you first of all understand the direction of the trend using 1 24-hour time frame, because all the activities of this market will give you a representation of the direction of which the market is going. So, as I said, we have 3 markets: the American market, the Asian market, and the European market. Then, moving away from that, we will look at the implications of trading section. Why you should pay attention to this. So, the implication of trading section is that you use trading section. The knowledge of trading section will make you to better time your trading. Trade timing, right? Trade timing is very important when it comes to trade management, because if you enter a trade in a better discount price point, your risky will reduce, right? So trade timing is very important. You will pay attention to trade timing and routine planning. As a trader, you have to plan. You don't jump into trade. You have a time of the day when you trade. So at that time you wake up, there are some people, they wake up in the night to trade Asian markets. Some people like trading American markets. So they pay attention to the pre-market section to identify high probability trading setup, and then they will place their trade. Another thing that you need to pay attention when it comes to trading is the momentum. If the market doesn't have momentum, especially if you are looking at the market and you find that there's not a greater momentum to push the market at all to a high time, as in to a new price high time, a new price point, then you need to calculate very well, because if there is momentum, for instance, for those who like trading retracement, if there is no momentum, I have to cancel the trade, because it's momentum that will determine if the price will be pushed up on a new high time frame, right? So the trade pressure matters. So whenever the implication of this is that there's a time when trade pressure, whether it is bullish pressure or buying pressure, there's a time that the buying pressure will be in equilibrium with the selling pressure. When there's a time the bearish pressure will be high, like we said, that after our trade, people will start exiting their position. And when people are exiting their position, that means, or taking their profit, that means the selling pressure will be high, right? So these are the things that you will pay attention. And also the implication also boils down to volatility, which is a very critical thing that you need to pay attention when you are trading. And then we have the bid spread, right? This bid spread affects your profitability in the market. So these are the key implications of trade section. So the next thing we are going to look at is how to using trade signals effectively. You know, a lot of us depends on trade signals, and sometimes you find out that after using trade signals, you don't make much profit out of it. So you need to know how to use trade signal. The first thing you got to do is that before you enter the market using a trade signal, first look at the chart. Don't just copy the trade signal and trade it. Look at the chart to verify whether the signal is coming from a true trade setup. That is, check to see the trade setup that gives rise to the trade signal. Most times you find out that most people that do trade signal, because of the pressure to give out trade signals, they just give out trade signals randomly. They look at market. I think this market will go up. Let me just, maybe if I put it, you know, when you look at the chart, you find that there's no reason for this trade signal. Like somebody is giving you a trade signal to go long on a chart that is, when you look at it from 24-hour time frame, you find that the market is on a downtrend and there is no sign of reversal. Then why the trade signal? Maybe the person look at the chart using 30 minutes and he's sending the trade signal for you because he finds there's a pullback, and you maybe you didn't know that the trade signal is just a 30 minutes pullback, and you enter it, and before you know it, you'll be already on a loss side, right? So check the trade setup that gave rise to the trade signal. Verify that setup. That is why you need to learn how to trade. I also use trade signal. That sometimes I will be lazy to do study. I will ask my friend if he have done some study to send me signal. He will send me signal. But before I do that, I will first of all check the trading section. I will check the chart to see if there is the signal that is sent to me have a visible trade, is coming from a visible trade setup. Then use 1 day and 4-hour time frame to measure the performance of the market before you use the trade signal. Check the trade volume, the momentum, and the trade pressure before setting your trade. Use your own risky reward ratio to set the trade. Don't trade if the signal is after hour time. So these are the things that you need to pay attention in order to use trade signal effectively. If the market, maybe a trade signal is given out and already the trade signal have moved beyond 5%, as in 5%. If you look at it, the entry point is like 5%. Don't enter. Don't trade. Don't trade that signal. Unless if you look at the signal and you find that the entry point is now above, have increased by 5%, don't trade it, because you are not at that point. You will not be at a very good. You will not enter at a very good discount rate, except you wait for retracement, right? So these are the ways if you you use to trade signals effectively, so that you will minimize your risky and manage your risky very well. Someone told me that his account of 400 USD got liquidated because of trade signal. But if that person had paid attention to these things that I mentioned, he will not be at that great loss, because some signals fell. Sometimes I will do all the analysis, have a signal, a call, and after because maybe I didn't pay attention to the volume and the momentum, and because of that, I didn't pay attention to the volume or the momentum, or then the signal is bound. Sometimes it fails, right? So these are the things as a trader you need to pay attention. Sometimes I use other people's signals as this is my secret. I use other people's signal as my trade scanning, right? I know I use it to scan the trade. If I got a trade, I will look at it, and if it is obvious uptrend, I know there's possibility of trading Fibonacci retracement. That's why I trade Fibonacci retracement most often, because I just make a little profit out of the market and leave. So these are the ways of using trade signals effectively. So we have come to the end of this topic. If you have questions, you can drop it on the comment box below the YouTube video, or on the WhatsApp chat, or any of the community managed by trading community managed by Mr. Shino Incorporated. So thank you. So if you want to learn more about cryptocurrency, personal finance, and investment, please click the subscribe button on YouTube now and connect with us. Thank you and have a wonderful day.